Over the past few years, we've seen significant changes in transaction volumes, property values, and the dynamics of unsold stock. These shifts have been influenced by various factors, including government's policies, economic conditions, and even consumer sentiment. And to help us navigate this complex issue, we are joined by Sulaiman Saheh, the Director of Research at Rahim & Co. International. I want to say thank you very much, Mr. Sulaiman, for joining us. Firstly, we want to take a look on the market activity and transaction, specifically on the volume of property transaction. How has the volume of property transactions in Malaysia evolved over the last 5 years? Especially we want to focus on during the pandemic and post-pandemic, and what are the key drivers behind any observed fluctuations?
Firstly, thank you very much for having us from Rahim & Co. to actually share our thoughts here. How the market has actually performed for the past 5 years, if you take COVID as a point of reference here, the market actually went down in terms of frequency of transactions or number of transactions expectedly. But if you look at the long-term trend, which actually shows there's a bit of a growth since 2018, 2019, which was actually disrupted by the pandemic because of in the year 2020 and 2021. But come 2022, because of the pent-up demand, where the market is still fueled by growth in population still, and there's still employment levels are quite safe relatively at that time, or rebounding, and unemployment numbers were actually stabilizing, has declined from the 5% high or 5.8% high during the pandemic and actually reduced down to just above 3%. So now the number of transactions have actually increased, especially in 2022. But because of the super growth that was, or there's a percentage growth that is, seen in 2022, 2023 showed a smaller increase relative to the growth in 2022, a normalization effect, if you like. But come to 2024, first half of the year of 2024, the numbers actually continue to grow again, which actually signifies the underlying resilience of the market that we have here in Malaysia.
And that is some of the structural shift in the market, and we can see as a short-term response to policies or economic conditions within the 5 years. And given with the recent trends, what is the outlook for property transactions in Malaysia? Will we see continued growth or a contraction, especially with economic uncertainties, rising interest rates, and even inflation?
The fundamentals of the market is still stable. I guess our OPR still remain at 3%. That's actually a good call. Considering the market, which is still playing at the back with the background of global economic challenges, is still there. Geopolitical situation also, there's some uncertainties from those respects. But looking at the market domestically, how it has actually been performing, because Malaysia is very much dominated by domestic demand, which actually help us with our number of transactions in terms of how the market actually behaves, in terms of how the frequency of transactions or number of transactions. This also helped, is actually helped by the population that we actually have. Because of Malaysian market, typically the stronghold is actually for owner-occupiers market, which are people who are actually buying for their own consumption. Although there are also a number of transactions which are investment, quite a number of them as well. But predominantly because it's dominated by the domestic market, it is pretty much stable. Now the question of whether the rebound that was actually seen in the past 3 years, 2022, 2023, and 2024. We see the growth would be more gradual because the sentiment of the market paints a different picture. What we see here, what you see on graph here, just comparison of how the first half performances are. The rebound in 22 normalized in 2023, and then 2024 it rebounded back up 8%. That is. The growth that is expected for the future or for the next 12 to 24 months is expected to be more gradual. At the same time, it must be supported by, it is still supported by accommodative government policies. focus on first-time home buyers should continue, and it is actually seen to be continued. The government continues to focus on that with special schemes, special incentive schemes, stamp duty exemptions for first-time home buyers up to certain threshold of house prices. So these are the impact that we can see in terms of the government policies that will actually play a role within the market, and we hope that it will continue on. But bearing the fact that the market trend right now has been performing quite well in 2 years ago, especially because of 2022. But it will be more gradual. But however, if you look at the long-term trend from how the market performed in the peak days of 2011, 2012, after the slowdown from 15, 16, right up to 2019, where it rebounded back a bit, and how the long-term trend is, it jives with what the trajectory of the market right now.
And you mentioned also about the Federal Reserve and also about the BNM OPR is at the, we can say a healthy state. But we can see that also Federal Reserve expected to cut interest rate in September. Will this move be followed by BNM, or will they be taking other alternative measures?
I think for that, I'll leave to the economists to actually answer that question because it's a policy measure. However, we think that the government would be still be accommodative to the market. Another factor is actually on the oil prices, how it has actually been moving of late. So I guess in terms of the global scenario, in terms of affordability and the cost of living is still a challenging situation. The world all over, and Malaysia is no exception. So I think the accommodative policies would still be needed to continue this growth trajectory so that it can actually enter into a sustainable cycle.
And talking about the value of property transaction as well, what has been the impact of changing consumer sentiment and access to financing on the total value of property transaction, and how are different property segments like residential, commercial, industrial performing in terms of the transaction value?
Total transaction value for the country actually improved in the first half of 2024, and that improvement is across the board, from residential to industrial, commercial, even agriculture properties as well, and also development land. This improvement is actually seen as a sign of market recovery in terms of the price growth that we have seen. Although it has to be reminded, we actually have to be reminded of how the market, the price growth that was actually jumping so high from 2008 right up to 2015 or 2014 at that time, that kind of price growth, spiraling house prices growth at that time was actually one of the reasons why affordability became a very big issue. The responsible financing guideline that is still enforced is expected to continue, and probably is a good call, which actually shielded the market movement in terms of when there's fluctuations, it'll be more minimal, minimizing the risk. For house prices generally, value of properties have actually been increasing in the past and moderated in terms of pace of growth. As a matter of fact, there is a bit of correction in terms of the house prices that we see in the past 2 years, where the moderation that was seen from 2020 to 2023 actually took a bit of a correction in terms of the percentage change, but the prices are still holding up. The one that you can see on the chart right now is when the price growth was so steep from 2010 to 2015, during the boom days, if you like. That was when the house prices were actually growing so high. This is like the median house price, but if you take into consideration of the individual projects, there were double-digit growth during that time. But the prices have actually moderated. We continue to see the market to grow, but it is going to be more gradual, and hence better relatively compared to having an unsustainable speculative market-driven price growth.
All right, Mr. Sulaiman, we only have a balance of 2 minutes. Talking about price, I want to also touch on the unsold and overhang of stock property. What are the underlying causes for the high volume of unsold properties, especially in urban centres like Kuala Lumpur and Johor Bahru? Because we want to see how much this overhang is due to pricing matches between developers and potential buyers. And second, how are developers managing their unsold inventory, and what impact does this have on future development plans?
I think with regards to overhang, we have to understand how market demand works. In terms of the sellability of a property, it is not just about pricing. In the past, where the focus was actually to come up with units that are affordably priced in terms of its quantum level or absolute level, does not mean that it is going to be sellable, because factors like location still plays a very important role. Products as well. Products means that there are markets where the number of overhang units are not just seen within the high-rise sector, but also landed properties. And if we look at the number of properties, the overhang properties, the distribution amongst all different various price brackets, it's spread. It's spread from the above 1 million, from the 500 to 1 million, 300,000 to 500,000. The presence of overhang numbers still persists. However, if we look at the overhang numbers, which is actually shown the one in blue over here, because overhang is actually one of the 3 categories of unsold properties. 3 categories of unsold properties. Overhang is the one when it's already completed and yet unsold. That's actually overhang. But there's also the unsold properties under construction and yet to be constructed. The number of the height of the blue bars here, which is actually for the overhang, it has been reducing. It has been reducing since the peak in 2021. This is actually good. However, we need to also note that the reason for this, one of the factors that actually contributed to this is the slower number of new launches that was seen during the pandemic years, which allowed the market to catch up. So now we see in first quarter 2024, the orange bar, if you like, the orange bar and the gray bar, which are units unsold, under construction and yet to be constructed, has slowly inched up again. And that's why moving forward, the solution to overhang numbers has to be done in a very comprehensive manner, and it's probably 2-pronged. It's a short-term and long-term, where more responsible market studies and decision-making is actually needed.
All right, this is a very good insight. Thank you for helping us understand the trends and the future outlook for the Malaysia's property market. Again, I want to say thank you very much to Sulaiman Saheh, the Director of Research and Rahim & Co. International.